assume that the market will go in waves down there. Okay, yeah, tell me, Wyckoff. Yeah, yeah, okay. Yeah, for sure. Yeah, that's why we are. Yeah, yeah, thank you. Yeah, yeah, yeah. Uh, for sure, we all know as market goes in waves, market won't go as we would like to expect to go in premium too high. And why I'm saying that? Because everybody, the buyers and the sellers, are testing their own limits, how much they can buy at this, let's say 94.3K limit, to push the price even more in premium to sell in premium. But are there enough buyers to push above this limit to take this liquidity and to test into this liquidity to create a new market structure that is sufficient enough for them to sell in premium? And as we see, no, at 1 day time frame, we have uh, a red candlestick formed up to now. We still have 1 hour and 27 minutes to end the day, at least in here. Yeah, correct. Up to now. But if this accumulation number two, it's not defying the lower limit of this range. The lower limit meaning this 83, 84K. If we don't go below 84K, then we see ourselves in the accumulation schematics number two. If it's below 84K, that means the spring is gonna go below 86, 80,600. Yeah, as we see. Correct. It sweeps the low. Exactly. And when it's sweeping the lows, it means there are enough sellers to push the price down below our lowest low, our local lowest low, to test the sell side liquidity. Are there enough sellers to sell even in lower prices? If the price doesn't go there, there are not enough sellers. If the price goes in range and it bounces and creates our zigzag market structure at the bottom of this range but doesn't exceed our lowest low, 80,600 that we had in our 21st of November 2025. If the price doesn't go below that, then we see ourselves in an accumulation phase C and accumulation schematics overall number two. If the price doesn't exceed that limit. Otherwise, we prepare ourselves for our last point of supply, LPS, in Wyckoff schematics phase C, for this range, 95K towards 84K, and we won't exceed the 84K because we've touched the 84K at least two times. And in two times, it didn't exceed the lowest low. In this case, if the market bounces in here and creates a similar structure like this, I would expect, at least from my point of view, to create a market structure. Somebody is accumulating in the entire range, and somebody is accumulating in this kind of range in here, would like to accumulate in this specific range in lower prices, and after that bounce back up and push the prices back up in premium, and they would like to sell in premium above, and they will manipulate the market structure in that kind of manner that they would like to sell in premium that's above 88k, that represents the median or the average of this range. So correct. This is, and up to now we are talking about macro time frame. We're talking about a macro structure, right? Schematics number 2 or schematics number 1 with a spring that would look something like this. Something like this that will go in. You see? Yeah, face ABC. Yeah, yeah. This is the PDF file that has at least 143 pages and presents different type of accumulations and distributions according Wyckoff. Because yeah, can you see my screen? Oh, okay, okay. Okay. Can you see my chart and my file in the same screen? Yeah. Okay. What I was talking about a bit earlier, sorry for my sharing screen, something like this. You see? This has the spring. It's either this spring, this type of spring, or something similar, or it doesn't have the spring, and we're in Wyckoff schematics number 2, something like this. Because the big guys would like to accumulate in lower prices in discount and sell in premium. Yes. Yes. Yeah, correct. It's yes and no. It's and no question or yes and no answer. And that's because market goes in waves. And what's above, the theory says like this: what's above goes below, and what's below goes above. You know, what happened above 88k can happen below 88k. but in waves. And that means for us as traders, intraday time frame. And that means we need to go below 1 day time frame. And that would mean that the market has an interest to go below, let's say, 1 day time frame, and we see something like this. We see it more choppy. But in this choppiness, like up and down, up and down, up and down, we need to know how to enter. Either we go long or short, and we need to understand how to enter into the market when we position ourselves. In this kind of range that bounces up and down, we need to know either we are on the upper side of the range or in the lower side of the range. If we are on the upper side of the range, we would like to short it. If we are going into the leverage kind of situation or positioning, or we would like to sell if we are on the top of the range, our crypto coins, and after that we would like to buy them back on in the lower side of the range, because we would like to make some profits, because everybody's up to profits, you know. Yeah, everybody would like to see green on their wallet. Correct me if I'm wrong, everybody. Yeah, everybody would like to make some money. But in this
Oh
up and down
yeah.
range, we would like to know we would like to know when to enter and when to
Yo.
exit. And if you know when to enter or when to exit, you'd like to know when to take your profits. Otherwise, you're losing money, right? So in on the top of the range, here you're selling in premium. Everybody's selling in premium. And if I divide, let's say, this 4 hour intraday time frame in smaller time frames, we have distributions. We have Wyckoff distributions. Here we see small distribution, right? This is a small distribution. This is a small accumulation on the bottom side. This is another small distribution. Somebody is buying in discount and is selling in premium with ups and downs, ups and downs. But on a macro time frame, it's an accumulation. Somebody's accumulating on the entire range. The big guys, they are distributing their own orders in small orders, because they would like to sell in premium to, yeah, yeah, that, let's say Qui-Gon would like to buy in discount in here, would like to buy 10,000 bitcoins, but he doesn't want to disturb the price action. But he manipulates the price action in that kind of manner that he can buy in discount each and every time, because he has time. And pay attention, patience is key, because he has enough patience to buy in discount long enough with his own orders to manipulate the price action in that kind of manner, so he would fill up all his orders for those 10,000 bitcoin without disturbing the price action up and down, up and down. And as a reference, yeah, yeah, he's buying with low frequency, but in hidden orders, in small orders, in that kind of manner that he makes me believe that price, according to this accumulation or distribution, although if I don't know where the hell am I would assume the price would go below 80K. But he likes to buy in discount. And he would like to sell in premium. But he is testing, and every big guy, every big whale is testing the premium side. Are there enough buyers that would like to participate to buy my Bitcoin in premium prices at this price? Yeah. And that's why I create market structures. Yeah. Everybody's testing the buy side liquidity. The big guys are testing the buy side liquidity. Are there enough buyers to buy me those 1,000 Bitcoin or 10,000 Bitcoin in premium? If there are enough guys, yeah, yeah, I'll push the price up. Yeah, yeah. But I would like to sell in premium, and this range represents, on top of the range I have the premium side. Here is the premium side. I'm selling the premium each and every time I go there, but I do it in a structural manner. And if I'm doing this in a structural manner at 1 hour time frame, I'm creating the waves up and down, the Elliott waves, the Fibonacci levels, anything you would like to call it, in that kind of manner to allow me to sell in premium. Because I cannot sell 1,000 or 10,000 bitcoins at once in premium. Why? Because I'm creating a sell wall. What does a sell wall represent? Represent a high quantity that is big enough or uh, enough for the market to stop the price to go there, because there are not enough buyers to fill my selling orders. And that's why I sell in chunks. That's why I sell in a distributed manner. And in this kind of distributed manner or accumulation manner, I would like to accumulate discount and sell in premium. I create the zigzags, the up and down, the waves to fill all my orders, to take up my profits, and I'm selling in on the profit side. Up to now, we need to understand that market goes for liquidity and market goes where the liquidity is. But the liquidity is created by the buyers and by the sellers, and every participant towards the market. And if everybody participates on the market, yeah, yeah, tell me, quite on. Yeah, orange and red represent the liquidity. It's a liquidation levels by Leviathan. It's just an indicator. I can hide them. That's on perpetual futures. Yeah, this represents the liquidation level. And what does, say, orange, red, and blue represent? Blue represents what is between 1x and 50x positions on leverage in the market. Because if somebody has an entry somebody has an entry in here, they've entered in here at this entry point, maybe they have this entry point 89.537k, and they are going long, but they are going long with 1 or 2 or up to 50x. Their liquidation level is printed with blue, so they will be liquidated if I enter here 10 bitcoins with 2x, but my liquidation level is 85K. You see, that's why we see here. Yeah, yeah. What's purple? It's between 50x and 100x. That's purple. And what is above or at least equal with 100x, it's red. Because red, it's almost where the price action touched these levels. See, we had this market structure in here. Where was that? Okay. Yeah. The red is always in the most in the nearest approach of the price action. So there's not so much of a difference between the red liquidation and the price action. Yeah, yeah, The- yeah. These represent the red represents the risky traders. The orange represent the less risky traders, and the blue represents the lesser risky traders that we have participants on the market. Either they are up to now in this kind of market structure, they are going, everybody's going long, and they think the price will go in higher prices, in more to premium. But there are at least three rules, unwritten rules, that participate to this market. Who wanted to buy already bought. Everybody who wanted to buy already bought. Where? In discount. Who wanted to sell already sold. Where? In premium. At least according to the market structure. Now, there are the type 2 traders. I haven't entered into the market. Where do I enter? If I'm entering in here, I would see myself into the position of being liquidated by having wicks or market, let's say, high volatility and frequency traders or algos participant to the market that would like to take me out from the market because they will touch down my either take profit or stop loss. And my take profit is somebody else's stop loss, or my stop loss is somebody else's take profit. Yeah, or entry. Because either we think it's volunteer or involunteer, players participate to the market in any kind of range. But the big guys are manipulating the price action and the market structure. When they are doing that, they would like to do it in ranges. They won't push the price vertically because the market doesn't go vertical, either up or down. Market goes in waves. And when the market goes in waves, the only thing that we can do is participate towards the market and buy on the lower side in the discount side and sell in the premium side. And when we are selling into the premium side, we would like to manipulate the market in that kind of in that kind of manner that nobody would know that we already sold our bitcoins or our positions and we took profits. And that's why prices go in waves and forms ranges. So yeah, exactly. Yeah, Yeah. Yeah. And above above that reasoning idea, we would like to know where we are at in here on this market structure. And for that, that's why we approach the market structure with Wyckoff distribution, right? And we go in Wyckoff distribution because we see in the zigzags, the ups and downs. Okay, where did we had something similar in this? Okay, we had something similar in Wyckoff schematics number 1. And we are waiting for the upthrust, the UT, to happen. Did it happen already? No, because we are somehow in ST around this phase. It's between A and B. We had the buying climax in here around 94.5. We had the automatic rally. We had the the first test in here with this ST that is forming right now. And I think what's gonna be below this one, the price is gonna be dragged down up to this SOW. This is the first sign of weakness. And when we are gonna see something like this, right? Something like this. Yeah, the first lower low, somebody would like to test this sell side liquidity. So the sellers are testing, are we satisfied enough to sell in lower prices? And if the market agrees, they will push the price even lower. But if the buyers are not satisfied, okay, you sold enough, we are going to intervene and we are going to buy. Then we are going to see the upthrust. And the upthrust represents something that is above our top limit, our buying climax, and our first test. And it's something that is above this area. And it's between 93.3 and it's gonna be up to 95, maybe 95.5. But this will happen into the future. It's just an estimation, it's just a guess from our side. Up to now, what we can do in this position or in this market range is just to short the market because this is our secondary test. This is our secondary test, the way I see it. And we are going to see lower lows, lower prices. But if the buyers are not satisfied that the buyers didn't sold in their premium, they'll push the price in the next 3 waves that we see in here up to the and create the upthrust to create the influence, to create the bias that the market is going to go upwards. But that's just a test. When they are selling in premium, when the buyers that bought in discount and they are selling in premium up towards the upthrust, they are testing the buy side liquidity. Why I'm talking about the buy side liquidity? Are there enough buyers to fill my orders? Where me as a buyer, I would like to sell in premium in here, in this area. If the price does touches this area, let's assume the price is gonna go there. And the buyers are not satisfied, they haven't sold enough into premium, they'll push the prices in waves even more higher. Why? They need to sell in premium. But selling in premium is telling me two things. They are testing the buy side liquidity. Are there enough buyers to fulfill their orders for the smart buyers that where they are selling? Or there are not enough participants to sustain the market structure. The buyers who wanted to buy already bought and who wanted to sell already sold. They sold in here. They sold in here. Everybody's selling towards the upper side. They'll do a zigzag. They'll create a market structure. And who wanted to sell already sold, and they sold into the buy side liquidity. They already managed to close their position in premium, in profits. They'll test the buy side liquidity. They'll tell me, okay, we are satisfied now, but the sellers are not satisfied enough to sell in discount because the buyers are selling in premium and sellers are selling in discount. Yeah. No, 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 no. What does represent when we go above our, let's say, ranging market structure, and you are selling quite wrong, you are selling in premium, right? You are testing the buy side liquidity. You did the breakout, but doing the breakout of this range, you are telling me two things. You are testing the breakout traders that's above the range to see if they have enough buying firepower to buy even more and to drag the price even more higher. Yeah, exactly. Are there enough participants to move the price even more higher? If not, yeah, yeah, it's gonna be something like this. Above the up thrust, we are not satisfied. Okay, there are not enough breakout traders that would like to enter long positions to fill my trading positions to take my profits out because I'm selling in premium. And for them, it's discount because they are trading above the range, they are trading above the creek. And if the traders, the breakout traders, are not satisfied or the sellers are not satisfied, they will push and they will drag the price lower towards the sell side liquidity, and they will sell in discount, even in more lower prices. Why? That's why market goes in waves, because this here it's a correlation in between the buy side liquidity and the sell side liquidity. Are there enough buyers satisfied to buy in premium or not? If not, then we are going back into the range in the accumulation phase, and we see ourselves in here up to our last point of supply. And last points of supply can have two meanings. It's either we stay in the range 80k, 95k, we distribute long enough, or we accumulate from accumulation from the big buyers long enough. We accumulate our long positions and we create the upwards trend, or we need to test below our uh, first test or our secondary test with a spring to see if there are enough sellers to sell in discount to give us the chance to accumulate long enough to move the price towards the upper side. Because in either cases, long or short, we need to test the upper, what's above the upper range and what is below the lower range. Testing what's above and below gives us the chance to know what's the market intention for the next phase, because market goes in phases, up and down, accumulation, distribution. And even so, we find ourselves in this case an accumulation schematics number 2. In this case, we don't have enough firepower to move the price above 100k. If the price is satisfied above 95k, we will move towards 97k, 100k. We test the 100k limit. Are there enough buyers to participate towards the market? to satisfy our selling orders in premium. If not, then we are going back into the range, and we will test the lower side of the range. We will test the sell side liquidity, and sell side liquidity means what's below 80,600K. If we are testing the sell side liquidity, and if there are enough sellers to participate towards the market, and the buyers would like to not participate, the sellers will push the price even more lower. And that means testing the sell side liquidity. Would sellers like to sell in lower prices? Yes. If yes, they will create a market structure. But in that kind of structure, does that structure represent a spring for the buyers in the accumulation phase that they intend to have it? If that creates for the buyers big slopes, ups and downs, then yes, the sellers are not pushing the prices lower enough to satisfy their selling orders, and the buyers would intervene, participate, and move the prices towards the upper side, back into the range and above that. But currently, the way I see it, we are in this kind of structure in accumulation schematics number 2 from Wyckoff. But it will have, the way I see it, it will have schematics or a distribution or an accumulation pattern. Yeah, because we haven't formed yet the last point of supply. Correct, Wyckoff. Yeah, correct, correct. Because this jumping over the creek represents the breakout traders are satisfied with their long positions. They create a sign of like an SOS, like they create a signal where they are satisfied in creating a small accumulation above the range. They create an accumulation above the range, and they will move the price even more higher. They trust themselves that the buyers will participate above this range, above this 95K range, and they'll move the price even more higher in premium. Correct. Uh, Currently, this is an accumulation. Accumulation. Let me hide the drawing. This is a big accumulation at 4-hour time frame that needs to be satisfied for both sellers and buyers. But if it's not satisfied long enough or big enough for their orders, they will continue to do this until they have until everybody has filled their big orders, split it in small orders. So from my point of view, at least Qui-Gon and everybody is here in the community, I do expect to bounce in this range for at least a couple of more weeks, at least 2 or 3 weeks to stay in this range of an accumulation. No, no, no. Schematic number two is not concisive enough. You know, this is not, this is concisive when last points of supply, our intraday range, now, yeah, in here, in this range, buyers are satisfied with their bought orders. If they are satisfied, they will push the in our last point of supply. We will touch this 85, maybe 84.5k area, this area in here. We will touch it at least 3 times. We had it once, we had it twice, but we hadn't had our third time. See, one, twice, third time. Yeah, around phase B that is unfolded. Yeah, the phase B is unfolding in front of our eyes. You know, because in our phase B, everybody would like to sell here in premium on top of the range. Everybody would like to, exactly. In phase B, we are touching it our second time in here, and we would like to sell in premium. And that's why from this point of view, would like to either keep an eye on it. If you're a breakout trader, what's above 94.5k, you go long with a tight stop loss, or you short it. You short the price inside of the range, and you wait with a tight stop loss above 95.5, around 95.5k. You short the range and you stay inside of the range until you have taken out your profits in the range. Either you would like to take it at 91k, at 90k, 89k, 88k, 87k, but the third time is decisive in this range. If it won't happen, the 85, 86k touchdown area, if it won't happen, then we will know what's above 86k. We will have had our last point of supply with a zigzag range that is seen in here. Is going to happen in here. The buyers are satisfied. They already bought first time, second time, third time, and they will push the price higher above the limit, above our ranging limit, 95.94.5k area, and they would like to sell it distributedly into premium. What's above 95.5, it's called premium because we are in a range going sideways here. Yeah. If we if Okay, okay, I'm gonna answer to that question. Okay, we are gonna. There are no foolish questions. There are only questions and answers. Yeah, definitely. But if, even if we have an accumulation in, let's say we have an accumulation, and this indicator that you see here, it's a momentum indicator that's a little bit choppy, but it doesn't affect my bias because I take my entry points and my exit points based on market structure, not on indicators. What's below price action and volume? It's lagging. Indicators are lagging. Every indicator is a derivative from price action and volume. Please, everybody, keep that in mind. There are no existential indicators that go hand in hand with price action and volume one-on-one. Everything that's on the market, either on New York Stock Exchange, on ETFs, on you name it, it's a derivative from price action, what we see on the graph, on the chart, and volume. And what's a derivative from price action and volume? It lags. The only thing that doesn't lag is the market structure. If we take into consideration the market structure, either go long from the bottoming position or go short from the top position of a range, then we stay in profit. Because we understand and we stay with the smart money participants towards the market. And this market structure that we see in here, let me put it like this. It's an entire market structure. Yeah. Okay. Oh boy. Yeah. This big macro range, we can consider it a local range, yeah, as you said it. But this local range, can it unfold into a local range that is part of a local range? Yeah. Yeah, local range from a local range that is part of a macro range. And we see in here, in this PDF presentation at page 22, that we have this accumulation followed by another small accumulation that is jumping above the creek. It's testing the buy side liquidity. Are there enough buyers as participants? And goes above and goes in waves towards the upper side, more in premium. And we have another accumulation or distribution. It depends how many participants are willing enough to participate to the market to push it towards the upper side, or retail traders or smart money are not participating towards the market structure, and they are going to create a lower low. They are going to create a distribution after this distribution, because you can consider this one as a distribution and followed by another distribution in here. You see? So it's a distribution followed by another distribution. But altogether, they represent an accumulation, a macro accumulation, because somebody didn't buy enough and somebody didn't sold enough. But if this will happen, let's say, like in this graph, in this chart, and we have an accumulation followed by another accumulation, then the price will move towards the upper side, towards a distribution. If this will happen, time will tell. In this up and down, in this kind of range trade, that's what I'm trying to imply in here. Yeah, that's why I told you. That's why I told you 2 days ago. We need to pinpoint it on the market. Where do we stand at? You know?
So we're going up.
Are we in here or not? Did it happen or not? Yeah, sorry. Tell me. Yeah, yeah. This is we can consider intraday time frame or let's say medium time frame between 4 hour and 1 day. What's a macro time frame? It's either 5 days of trading, 5 days like on New York Stock Exchange, London Exchange, London Stock Exchange, or Tokyo Stock Exchange, because at least from my understanding, they are trading from Monday to Friday, not in weekends, but Bitcoin and any other crypto exchange goes and is being involved into trading also in weekends. And we can either consider the macro time frame, the week time frame, weekly time frame, and we can see it in here that we are in an accumulation phase. Either is gonna break up or break above this limit, this 94.5k limit. It's up to market side to unfold itself. Tell us if the buyers are satisfied, if the sellers are satisfied, if the buyers are not satisfied, or the sellers are not satisfied. And yeah, but the market intention is always hidden in plain sight. Is always hidden in plain sight. That's why we need to uh, uh, understand the macro time frame. It's either 1 week, 2 weeks, 1 month. In 1 month time frame, maybe the sellers are not satisfied enough, and they are selling and they are still buying here to create another lower low. In this lower low, they could give us the intention that they would like to create this kind of market structure, like in here, in here, as we see in here. Maybe this SC, this selling climax hasn't happened yet at major macro time frame, and I'm talking here about 1 month time frame. Maybe our last point of supply from the buy side liquidity is has happened in here, and we are still expecting a lower low. In our, let's say, community terms, we would call it a bear market. But from my point of view, there's no bear market or a bull market. It's how long enough are satisfied buyers or sellers. Where's the opportunity? Where's the premium and where's the discount? Are there enough participants towards the market to be satisfied in premium in here? Or are there enough sellers to be satisfied here in discount? Yeah, can be a macro Wyckoff distribution scenario. And if this hasn't finished having its lower low, then I would expect at a major macro time frame, 1 month time frame, to have a lower low. Maybe this acute intraday time frame or intra-weekly time frame, it's a distribution followed by another distribution. That's why I told you patience is key, and we need to wait to see, because this spring can unfold itself to another, have another distribution, unfold itself to another distribution pattern. Correct. Distribution followed by another distribution. Correct. Correct. Yeah.
Correct. Higher time frames.
Yep. And we can see in here a distribution followed by another distribution. And this is our, let's say, our current bottoming range, 80.6K. That represents a key pivot, our bottoming line. But this hasn't happened. If it's going to happen, we will see a structure break of structure, as traders would like to call it, and we another distribution that can be translated into an accumulation. This distribution can have exactly can be a failed spring, but this failed spring can have a form or a structure like a distribution transformed into an accumulation, something like this. See, it's above or it's below the creek. Somebody is accumulating. We are gonna call it secondary distribution, and they're gonna jump above the creek. They're gonna push the prices upward. And if they're pushing the prices upward, then we are above the creek and we are above the 80.6K limit. What's above 80.6K limit? Well, it's something like this. So it's a accumulation, and this masked and hidden in plain sight, but you would like to know where you are right at now, or into the next weeks, into the next phases. You would like to know where you are positioning yourself. What's on top of the range? You would like to know, I'm gonna take my profits. Okay, let's do that. Can I enter in shorting position? Yeah, but with tight stop losses, because it can unfold itself something like this. And if I'm entering into the market something like this, okay, because I misjudged the market, okay, I need to have tight stop losses because I would like to short the market, but I would not like to lose money on my leverage trade. So yeah, it's just a matter of patience to see how the market unfolds itself, how the market structure is being created. But minor time frames. Minor time frames for me, it represents 4-hour, 1-day time frame. And inside of this range, can I trade? Can I take my shorting positions? If I do take my shorting position, I'll have my tight stop losses around 94.8, 95.5. And after that, I will see how market unfolds itself to grab my profits into this liquidity that you see it here in blue. That I hope it makes sense that here are the leverage traders that go between 1x and 50x. What's with orange, it's 50x towards 99x. What's with red, it's 100x towards 150x. Correct. Yeah. 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 Okay. In this range, in this range, I'm having my shorting positions between 94, 92.7 and 95, with a tight stop loss between 94.9 towards 95.5. Here it's gonna be my stop loss. Correct. No, it's not about it's not about how market closes on the candlestick. It's, are there enough buyers to push the price even more higher? If not, the market is gonna take my stop loss, and I'm gonna trade the market as a breakout trader because I need to change my bias instantly. Are there enough buyers to push the price above 95.5? If I'm gonna see here 2, 3 green candlesticks that are going aggressively and the volumes increase from 4 hour to 4 hour time frame in high volumes, then yes, I'll trade this like a breakout trader. Okay. But the volumes need to be increased. Volume need to be increased from 4 hour time frame to time frame. And I need to see green volumes at least at 4 hour time frame if I'm going to change my bias to go long. Currently, in my position that I'm currently right now, I'm in a shorting position. But if there are enough buyers to push the price even more higher above 95.1, 95.5, the market is gonna take my stop loss. I'll see here green volume candlesticks, and I'm gonna trade the market as a breakout trader. And I'm gonna go long in here. But I'm not gonna go long in here from 95 towards 100k. I'm gonna go in stages. Maybe it's gonna be from 95 towards 97. Maybe the buyers are not satisfied enough by the premium side, and they will drag the price down in a same manner, and they will self-regulate the premium and discount prices volume in that kind of manner that they will drag again the price down, and then again I'm gonna enter in a shorting position, although I've been stopped out. But I need to have enough liquidity and to be prepared 24/7. Because if I don't see green volumes, if I don't see the green volumes, I don't have any kind of obligation to go long. Yeah. Yeah, you can call it a bull trap. You can call it a next small distribution above a distribution. Yeah, yeah. Yeah, I'm just explaining different type of cases and scenarios so that we all know, everybody from this community, everybody from all around the world would like to understand and to position themselves in that kind of way to have a good opening position. Either breakout traders go long and they take their own profits, either shorters go in shorting positions and they take their profits at the bottom of the range in that kind of manner, so that everybody stays satisfied. Yeah, yeah. My only intention for you, Qui Gong, and for everybody here in the community that is online with us, is to stay on the right side of the market. And patience is key in here. If we are patient long enough to see if the breakout traders and if the buyers would like to buy more, yeah, for sure, we are going in long position. I'm being stopped out. I'm gonna go long. If the buyers are not satisfied by the buy side liquidity of the top of the range, then my short won't be stopped out, and I'm gonna take my profits at the bottom of the range. Yeah, I'm gonna take profit instead. My first target to take profits, it's 91 point. Yeah, I'm gonna scale out. Yeah, it's gonna be 91,000. It's gonna be 91,000. It's gonna be below this wick, below our local wick that we formed today, 91,000. And after that, because market would like to test in here, are there enough sellers to participate and sell their Bitcoin? Yes. If yes, they are going to be. I'm always closing my entire position. I'm going to take my profits 91K. If the price is, I'm, I'm closing. I'm always targeting the bottom of the range or the top of the range. But if I'm satisfied to take here my profits at 91K, this is the first scenario. I'm taking my profits at 91K, and I see that the market intention is to go towards the lower side, the range, then I'm gonna open again a short position. I'm gonna short again the market, and I'm gonna take my profits incrementally. Yeah, open and close. Correct. And from 91K, I'm gonna go, target I'm gonna target towards 88.5, 88K. You see in here from 91, I'm shorting in waves because the market goes in waves. Yeah, correct. That's, that's why I'm here. I'm here for the next 2 or 3 hours. I can explain. Yeah, yeah. Yeah, yeah. For because we have the basics, and I know that everybody knows the basics, but we need to pinpoint it and to be accurate on the market, on the market structure and on the market price action and volumes, because we need to create the correlation between our lessons learned from the PDF file and on the market structure, the things that we see in our in our face, in our um, front eyes, Yeah, correct. Yeah, yeah. My pleasure, qui. Yeah, yeah, yeah. If everybody around here has questions, that's why I'm here to uh, present and explain and clarify things. The more you see things around in a clear manner, the higher are the chances that you're gonna stay on the right side of the market. Because I've been on the wrong side of the market in my last 8 years. That's why I've read so many books so many seminars, so many informations, and I've tried to create some documentaries, some documentation for everybody to understand and see what I see and what market implies us to see, that would like market to unfold. Yeah, this PDF has
Damn.
143 pages with all the documents and all the at the end of this PDF that's based on the graph. Yeah, and this is based, and this is one of them. And if you'd like to read all my books that I've read in 2025, here are the books explained with the ISBN number, with the number of pages, English type of kind of file that you would like to read in, uh, where you can actually read them. I have them. I can give them for free for you, but it's gonna take you a long time to analyze them and understand what's inside of them. That's why I created this synthesis of PDF file with graphs extraction from those books. Yeah, You have the books of biography, and you have the tools, the coin analyze, the trading view, coin anch, coin glass, the coin market cap, tensor charts. You can play with all these tools for free, and it's being written here what they represent and what you should look for up to into these kind of tools. Uh, 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 yeah, yeah.